Today, we explore the most crucial news shaping our world, from the Fed's critical policy decisions to the economic implications of tech market volatility. We'll also discuss the latest developments in the ongoing U.S.-Israeli conflict. Here are today's top 10 stories you need to know. In the wake of recent market news, investors are adjusting their strategies in response to the changing economic landscape. The fluctuations in stock prices, driven by factors such as inflation concerns and interest rate adjustments, have led many to reevaluate their investment portfolios, weighing risks against potential returns. Financial analysts are advising caution as market volatility continues to be a pressing concern. Historical data suggests that similar market conditions have often resulted in significant shifts in investor behavior. As new information becomes available, investors are urged to remain vigilant and adaptable. The importance of informed decision-making is emphasized as market conditions evolve. Looking ahead, the choices made by investors during these turbulent times will significantly influence market dynamics and could determine the trajectory of economic recovery in the coming months. As geopolitical tensions rise, global trade is encountering significant challenges. The ongoing U.S.-Israeli conflict with Iran is creating uncertainties that could disrupt supply chains and trade routes. Countries reliant on stable trade agreements are now facing potential disruptions, which could lead to increased costs and delays. Analysts are closely monitoring these developments, as any escalation in conflict could have far-reaching implications for international commerce. Businesses are being urged to prepare for potential supply chain disruptions and reassess their strategies to mitigate risks. As the situation unfolds, the global economy's interconnectedness will be tested, with trade dynamics shifting in response to geopolitical events. The coming weeks will be crucial in determining how global trade adapts to these challenges and what measures will be taken to ensure stability. The volatility in the tech sector shows no signs of abating, as major companies report mixed earnings results. Investors are feeling the pressure as they grapple with the implications of high valuations and uncertain growth prospects. The recent sell-off in tech stocks has raised alarm bells, prompting many analysts to reassess their forecasts. Companies that were once seen as growth leaders are now under scrutiny for their ability to deliver consistent profits in a shifting economic environment. As the tech landscape evolves, market participants are anxious to see how these developments will unfold. The next earnings reports will be pivotal in shaping investor sentiment and determining whether the sector can stabilize. As tech companies navigate these challenges, the broader implications for the economy will remain a focal point for analysts and investors alike. As global tensions rise due to the U.S.-Israeli conflict with Iran, inflation concerns are becoming increasingly prominent. Economists warn that the ongoing instability could exacerbate inflationary pressures, particularly in the energy sector. Rising oil prices, driven by geopolitical uncertainties, are likely to impact consumer prices across various goods and services. The Fed's recent decision to maintain interest rates has sparked debates about how best to tackle this impending inflation. As consumers face higher costs, the potential for diminished purchasing power looms large. Policymakers will need to navigate this complex landscape carefully to avoid stifling economic growth while addressing inflation. The next few months will be crucial in determining how inflation trends evolve in response to both market conditions and geopolitical developments. As we look ahead, the implications of these inflationary pressures will resonate through the economy, influencing both consumer behavior and investment strategies. The stock market has recently faced turbulence, with major indices such as the Dow, S&P 500, and NASDAQ all experiencing declines. This downturn has been attributed to a widespread tech sell-off that has rattled investors. Concerns over tech valuations and rising interest rates are contributing to the overall market volatility. In particular, the technology sector has been under scrutiny, as recent performance indicates a potential overvaluation of tech stocks. As investors reassess their positions, the market's response to these developments will be critical. Analysts are cautioning that if the tech sell-off continues, it could trigger more significant corrections across other sectors. The fluctuations in the stock market can have far-reaching effects on consumer confidence and economic growth. Investors are advised to stay alert as market conditions evolve and the potential for further declines looms. The coming days will be pivotal in determining whether this turbulence is a short-term phenomenon or a sign of more profound market adjustments. As the financial world anticipates the release of the Federal Reserve's minutes, analysts are engaged in a heated debate regarding the future of interest rates. The outcome of this meeting is expected to provide critical insights into the Fed's stance on inflation and economic growth. Some analysts argue that the Fed should consider raising rates to combat rising inflation, while others believe maintaining current rates is essential for continued growth. The conflicting views within the Fed's committee reflect broader uncertainties in the market. Investors are keen to understand how these discussions will impact their portfolios and investment strategies moving forward. The implications of the Fed's decisions could resonate through various sectors, particularly those sensitive to interest rate fluctuations. As analysts prepare for the upcoming minutes release, the economic landscape remains precarious, highlighting the importance of clear communication from the Fed. The conversation around interest rates will undoubtedly continue as the market seeks direction in these turbulent times. The ongoing U.S.-Israeli conflict with Iran continues to have significant economic ramifications worldwide. As tensions escalate, oil prices have seen increased volatility, impacting markets across the globe. The U.S. government's response to the conflict has raised concerns about potential sanctions and their effects on international trade. Economists are closely monitoring the situation, as the conflict's duration and intensity could influence global supply chains and energy markets. The ripple effects of this conflict are felt far beyond the immediate region, as countries dependent on oil imports brace for potential price hikes. Additionally, the geopolitical instability has led to shifts in investor sentiment, with many turning to safer assets amidst the uncertainty. As the world grapples with these developments, the economic implications will be closely tied to diplomatic efforts aimed at resolving the conflict. Analysts are predicting that the economic landscape may shift further if the situation does not stabilize soon, leading to potential changes in global trade dynamics. Tata Consultancy Services, India's largest IT services company, has just announced its earnings for the first quarter of 2026. This report is highly anticipated by investors, as it serves as a crucial indicator of the broader technology sector's health in India. The focus of this quarter's results centers on artificial intelligence, client spending, and operating margins. Analysts are particularly keen to assess how TCS's significant investments in AI technologies are translating into tangible revenue growth, especially amid a volatile global demand environment. The company's ability to maintain stable profitability is vital, particularly given the shifting economic conditions, including rising inflation and geopolitical uncertainties. As TCS reveals its financial performance, the market will be closely scrutinizing the insights it offers into the IT sector's resilience and future spending trends. The outcomes of this report are expected to set a precedent for the entire earnings season among IT firms. With the technology landscape evolving rapidly, TCS's strategic responses to these challenges may provide valuable lessons for other companies in the industry, influencing their approaches in the upcoming quarters. In a significant market development, SpaceX's stock has faced notable volatility following its recent inclusion in the Nasdaq 100. This milestone is a testament to the company's prominence in the aerospace and technology sectors. However, analysts have reported a considerable sell-off, raising concerns among investors about the company's short-term stability. As one of the most anticipated players in the tech industry, fluctuations in SpaceX's stock are closely monitored, given its pioneering role in commercial space travel and satellite internet. While several major financial institutions have issued bullish reports, projecting a consensus price target that indicates considerable upside potential, they also caution that substantial capital investment is necessary to achieve its ambitious objectives. Goldman Sachs estimates that SpaceX will require approximately $270 billion in debt capital by 2030 to sustain its operations effectively. This market reaction to stock volatility underscores broader concerns regarding the tech sector's health and overall investor sentiment amidst economic uncertainties. As SpaceX navigates these financial challenges, its future growth and profitability remain critical points of focus. Investors will be particularly attentive to how the company addresses its capital needs and meets market expectations in the coming quarters, especially as it strives for profitability. The Federal Reserve is set to release crucial minutes from its recent meeting, which could significantly reshape the economic landscape. Under the leadership of Chairman Kevin Warsh, the Fed opted to keep interest rates unchanged, a decision that has sparked intense debate among officials. This choice comes amid rising concerns about persistent inflation, which has been exacerbated by global geopolitical tensions, particularly the ongoing U.S.-Israeli conflict with Iran. Such complexities complicate the Fed's decision-making process, as officials grapple with the dual challenge of fostering economic growth while keeping inflation in check. Analysts are keenly observing whether Warsh will modify the committee's previous policy statements, especially given the stark divide among officials. Some advocate for tightening monetary policy through rate hikes, while others prefer maintaining the status quo to support economic recovery. This internal discord reflects the challenging economic environment, which has left investors anxious about future spending and investment. The upcoming release of the minutes is expected to provide valuable insights into the Fed's strategy moving forward. As officials weigh their options, the implications of their decisions will resonate through both domestic and global markets. Investors will be particularly attentive to how the Fed plans to navigate these turbulent economic waters in the months ahead, especially in light of evolving global events. Thank you for joining us today. Which of these stories shocked you the most? Don't forget to like and subscribe for more updates on world news.